Hello and welcome to the Wendell Effect for the Indian markets. I'm Brandon Wendell and I'll guide you through my analysis of the markets for the week of the 11th of December, 2022. So, just a reminder, we're not broker dealers or investment advisors. Taking a look at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities, or telling you to, or recommending any purchasing of anything. Past performance, no indication of future results. There's no guarantees of, basically there can be losses in the markets. We just try to manage the risk we can't eliminate. And also, we're not subject to trade restrictions. We got a position in security and issue one at any time. Stay in touch with me if you will. Please email me if you got questions or comments at brandonwendell.cmt@gmail.com. You can also hit me up on Twitter at TraderBdub. So, jumping into this week, December 11th, as far as the markets for the week, we had a big red here in the center under technology and also energy and minerals. We had some bullishness in the non-durable consumer side and also a little bit of finance as well. So that's what kind of held the market up. Overall, the Nifty's still been bullish, and that's what I've been expecting. We had a little pullback this week, but we didn't make new lows. So we're still well on our way to our next target of 19,636. About halfway there, as a matter of fact. So we had our impulse up. That swing that we're on right now, it's going to have corrections before it goes higher. So you can see on the Nifty, we have this continued impulse up. Potentially, it might be a little lower if we end up pulling back to this 18,261. That's the next area of demand here. So could we be done with this downward move? Yes. We had a really big candle on Friday that had a lot of selling pressure. Might be overdone. And if not, if we do drift lower, then the 18,261 demand zone should catch us and push prices up. Looking at the 4-hour chart, you can see we retraced about 61.8%, so pretty good retracement, and that's suggesting that we are going to continue to move higher. We need to break the high of this candle, though. If you break above 18,510, expect markets to continue to rally up at least to 18,876, if not the 19,164 zone. We're staying in bullish territory, though. We haven't gone into bearish at all, so we're likely to bounce here. Looking at Reliance, this is also coming down towards an area of demand. You saw Reliance sell off quite a bit last week as we were moving away from its overhead supply, but we're holding in bullish territory, and with that big candle at the end of that move, usually those are retraced pretty well. So look for a possible bounce. If we go any lower, we should bounce at 25.94. If not, bounce higher. But since this zone has been tested, we can easily go back up to the prior highs here at 27.55 pretty quickly. The only test would be right here. We have kind of drop-based drop, and that area right around 26.71 could pause price a little bit, so watch out for that. Looking at Reliance, historically, it's been pretty flat for the last 10 years. We've gone up and down about the same, so don't really expect this to give you a lot of direction in the markets. It's just kind of choppy as we look at this right now. TCS, on the other hand, looks pretty bullish. Historically, you get a nice big move on average about 3% to the upside between December 11th and the end of the year. So 80% of the time, it's gone up for the last 10 years. So expect more bullishness out of TCS. You can see that we did break out of this prior zone. At first it held, then we went through with plenty of momentum. Now we're pulling back. And it's interesting because we went into bearish territory. So 80% of the time for the last 10 years, we've been bullish. But this may not be one. As a matter of fact, it looks almost as if we're forming a head and shoulders here. So that bullishness that we should get towards the end of the year may only form our right shoulder. So that's what I'm kind of expecting, is that right shoulder to form. And that right shoulder should top out underneath 3,400 right here. So we could move from where we are right now, just under 3,300, up about 100 points, and still be maintaining the overall trend for the past 10 years, as well as the right shoulder before we break down. So keep an eye out on that. That could be a big trend reversal coming in TCS. But as of now, expecting it to bounce from the neckline a little bit. Infosys also has been very bullish. For the last 10 years, from December 11th to the end of the year, 90% of the time we've been bullish on Infosys. So looking at the chart, you can see we had a pretty big sell-off. Same kind of thing, though, where we have a possible left shoulder, head, getting ready to form that right shoulder. So while we are expecting some movement to the upside, it may not be able to break above this high, which is about 1640. So keep an eye out for that to see if we actually do form a right shoulder, and it should be much slower on the move up compared to the fast move down. Looking at HDFC Bank, 80% of the time for the last 10 years, it also has been bullish and gone up about 1.25% roughly. So looking at the chart, we've been stuck sideways here, but we should get a breakout. The longer you go sideways, the more likely you are to break in the same direction you came in, which is upward. So wait for it to close above 1642 before you start going long. I always wait for that close above and a retest for it to be proving to me that it wants to go higher. If not, we're likely to go back and forth in this range even more. Now, looking at the Nifty Bank, this looks very bullish. As you can see, we created a couple new demand zones at 39,305 and also 41,677. Lots of bullish pressure here. Momentum is strong. It's continuing to go. Looking at the Nifty Bank, historically, 60% of the time for the end of the year, it's been a bit bullish. Not huge, but 1%. So we should expect more moves to the upside. There is no demand right nearby of any quality. The only thing we've got really is down here at about 39,100. So if we do pull back, maybe throw a Fibonacci retracement on here and expect to buy on a pullback to one of those levels, because we did stall out just a little bit here at our first target, and you can see the momentum is dying as well. That could lead us a bit sideways going forward for the week. Looking at the 4-hour chart, we're starting to see signs of weakness. You could see that prices tried to make new highs, but we did it with a lot less momentum. So that's pulling us back dramatically there. So expect a little pullback. Again, it may not come all the way back down. As a matter of fact, if I go out to the Bank Nifty, or actually, let's do it. Nifty Bank. There we are. On the daily chart, as I was saying, we basically have this impulse up. And if we look for corrections on this, we look at our retracement values. There we go, a little bit better. And now we can see where some of these pullbacks might occur to. This again is on the daily, not the 4-hour. So let me just clean up the label here. And we can look at the 4-hour as well to see if any zones line up with it. But you now have some possible bouncing points. 43,137 is the first one. Then you got 42,694, 42,336, and so on. So if I do take this down to the 4-hour time frame, I don't really see any great zones lining up with it. I mean, there is definitely drop, base, and rally out of this area with a zone inside. This could possibly be a zone as well, right at the top. So it could just be a very small retracement before we continue up a little bit deeper. And it's not really a great zone here because there wasn't really any follow through after the gap. But you also do have one at 78.6. So look for a little pullback on the Bank Nifty to see where this might end up continuing to push back up. Going back over to our slides, some new trade ideas. We're looking, last week we were looking at Nestle India, and it did not pull back into our entry spots. We're still waiting on that to occur. So no entry yet. We'll see if this is still good, but we'll see if it does pull back. Tech Mahindra did pull back. Now you can see the RSI is right about at 40. And typically if we're at or below 40 on the RSI, there's too much bearish momentum and I cannot buy. So as this came in, it actually did go a little below 40 when we were making the lows and breaking the demand zone. So I'm going to call this one off. It doesn't look like it's going to work out for us. So hopefully it didn't enter because there was too much bearish momentum. Anyway, that's what I got for you this week. If you got any questions, feel free to email me at brandonwendell.cmt@gmail.com and also hit me up on Twitter if you'd like. Until next time, trade safe, trade well, and take care, everybody.